Hi everyone, Tim Storm here with another Friday rate and mortgage strategy update. Well, rates are up another 30 basis points this week. Just over the last 2 weeks, rates have increased nearly 0.75%. Now, the two primary reasons for increased rates are the debt ceiling crisis and the banking crisis, which is resulting in banks flooding the markets with bonds and securities. A large supply of bonds results in lower prices for bonds. Rates have an inverse relationship to the price of bonds, so mortgage rates are up. But still, as inflation continues to improve, mortgage rates should also improve. So I'll keep watching and I will keep you updated. So the question of the week came from one of my VA clients. And for those of you who don't know, I am a VA loan specialist. I've closed VA loans for more than 30 years, and at times it has actually been more than 70% of my business. I have a lot of VA clients with rates in the 2.25 to 2.75% range. So my VA client is planning to sell his home. He has a 2.25% 30-year fixed rate. And he asked me, is his loan assumable? And yes, VA loans are assumable. And 2.25% is definitely worth assuming. And it's worth paying a higher price for that home just to be able to assume the rate. The longer the buyer plans to own the home, the more money they will save in the long run. So let's look at the numbers. So in this case, we have a home that's priced at $700,000. It has a 2.25% VA 30-year fixed. The current payment the veteran is paying is $1,970 for the principal and interest. If a conventional loan buyer comes in and buys the house for $700,000 with a $450,000 loan, with closing costs and everything else, he's coming up with $262 to close. His total payment is $2,844. That's the principal and interest payment. If you were to assume the loan, then let's say he bought it for $750,000. So the seller, the veteran, gets an extra $50,000 from the sale. The buyer came in with the same amount of money. Say he comes in with $260,000, because that's the difference between the loan amount and the purchase price. He's getting a 2.25% rate. He's saving $874 per month. Now, if the buyer decided he wanted to take that savings, apply it to principal, he could actually pay the loan off in 17 and a half years, versus that conventional loan that he'd be sitting in for the full 30 years. So the savings over time are huge. Now, when you really look at what the savings is, if we go say it's 60 months, his principal balance on the conventional loan would be $421 versus $423 on the VA loan. But this doesn't take into account the $874 monthly savings that he's been doing something with. If he was taking it, applying it to principal, he's already down by more than $50,000 in loan balance just by doing that. Over the term of the loan, he will save a ton. So he'll save $400,000 in interest if he never takes the savings and applies it to principal. If he takes it and applies it to principal, then he's saving $475,000 in mortgage interest. So the benefit is huge. It's just making sure that everyone is clear, that the buyer is clear on how much money they're actually going to save by being able to assume this VA loan. If you have a client with a low VA loan on their property and would like to see what the numbers look like for your client or listing, please reach out to me today. Also, a heads up, I will miss the next few weeks because my daughter Bridget will be getting married in Canada, so I will be traveling. I'll still have my computer as I always do, but I just won't be sending out Friday videos for a couple of weeks, at least until mid-June. So have a great weekend, and I hope to hear from you soon.